Okay, this is Brian Stoll for Timing Strategies, Wednesday, December the 19th. What is this? 5 more days shopping till Christmas? Who knows? I still I have no idea what I'm getting for Christmas for anybody except what I already got for my wife. So here we go. Spiders today, S&P basically again unchanged. We're making a move. Whatever downgrades came out from Moody's about municipal bonds, the whole story basically stopped it. What I want to bring to the point is, again, we've got this threat of this Santa Claus rally coming in, seasonality, year-end window dressing, triple witching. You can make up all the reasons you want. And again, a deeply oversold market. What I'm looking for potentially is one more day down. That could take us, get that magnet off. One more day down. That could take us, basically wash out these lows and then head back up. And again, this is all imaginary stuff. I've seen, multiple types of setups, and this is just one of them, so anything could happen. What we're looking for again is one last move down, whether it opens higher above today's high or whether it opens lower below today's high, wipes out those lows, hits down into that level that we're looking at, wipes out yesterday's lows, and then heads back up into the range of, the range since the last Fed meeting, possibly as high as the 150 half level or the 151 level. And right up there we've got a confluence. If you look right up there, we've got a confluence of several fib levels. For all the idiot wave fans out there, it's there. Is it going to happen? Is that going to make it? I have no idea. But in order for that to make it, basically we have to have a move from today's closing price that does not violate yesterday's low, but instead takes off directly from there. Otherwise, that confluence starts to become a little bit out of alignment. What I do want to bring to the attention here is kind of what a little bit of symmetry we're looking at right now from basically the 11th of October, the highs of the markets on October the 11th, days down and percentage moves. So we've got a 5.7% move down from October the 11th to October 22nd. That took 8 days, 1, 2, 3, 4, 5, 6, 7, 8 days down. If we look at what we've got coming in right now, we've got, again, that was from yesterday's point, we've got a 5.9, it's probably 5.8, almost the exact same percentage move down from October the 11th to the 22nd, which was 8 days down. Problem is today, this count is only 1, 2, 3, 4, 5, 6 days down. So one more day down could bring us real close to that 8-day percentage move, and very close to that percentage move, and exactly right on that 8-day time sequence. What I'm looking for, worst case, best case scenario, is again a rally sometime starting in these next 3 days, starting Thursday tomorrow up until Monday, basically the 26th. So Thursday, Friday, and then Monday. And that, if we don't get a low that brings us from where we're at now back up into this range somewhere, then potential is we're looking at a real bad bear market that nobody wants to sell into, nobody wants to chase lower, but that's sometimes the hardest thing to do, is the most profitable. Let me bring our attention real quick to the XLF, which today looks as though it's trying to make a bottom. Again, any bottom, in my opinion, in the financials is going to be temporary. What's the percentage move that it's going to make? That's the givey. That's the tough one. We could see a 10-15% percentage move easily. At least back up into that range would give us 10%. We could wipe out those highs by the end of the year or into the early part of the new year. But then ultimately, my opinion is that no matter what happens, we will fail from this level. Even if we do go up, we will take it back down. So I don't know if that's even going to happen, if we're going to get that move up into the end of the year, but ultimately I think these financials are going to fail. It's a short-term, low-risk investment right now, and anything can happen. The financials might have had it all taken care of. All this money coming in might just be what they need. I don't think it's anywhere near enough, and I don't think all the problems are anywhere near disclosed. But we could get a nice move, and again, we could just keep drifting lower and lower and lower from here. So what we're doing is we're keeping an eye on this level for tomorrow with the UIM. I believe that's our and also our XLF. Really, with this for our major indice, if we get a move above tomorrow this level, the 2930 level, then we'll probably get long a small position in the XLF or the 2 beta ultra long financials. Or if we take out today's low, we will probably be using the SKF again, which gives us double exposure to the downside. So really what that would have to do, just looking at it from the upside down point, is all that would have to do is take out that high, and we would be getting long this SKF, which would simply mean the XLF going below that yesterday and today's low. Beyond that, not a whole lot left to go into or report on. The emerging markets still, to me, I think, are where not to be. We could get another rally up from here, although I think that it's not going to happen. That's a think. Thinking can be dangerous sometimes, as long as thinking's not as dangerous as long as you don't act on it. Invest in and manage what you see, not what you think, and that's sometimes tough, human nature, I know that. Beyond that, the gold, GDX, kind of a tough one here, because if you go back to July's highs, we're sitting right there, and we're kind of mishmashing back and forth on the July highs. I would like to see gold take off below that 43.30 level and somewhere down, into at least this fib level around the 40 half level, maybe who knows, as deep as that. At that point, yes, I'd be much more interested in buying. But like I mentioned earlier, on the GLD, we're not getting the kind of follow through the downside that I'm looking to see that we are getting out of the GDX. So there's a divergence here. I'm anticipating if this continues, what we may do is just get short the GLD. Get long the GLD and get short the GDX but the only problem is that the paper stocks are much more volatile, so that doesn't always work. So we'd have to probably have a volatility adjusted as far as position size. Other than that, we'll see what happens tomorrow. If you have any questions, please give us a call or an email. Check out the rest of our webpage, and again, if you look at our current positions page, you'll see that we did take, we were short 40% as of the 10th of October, the 10th of December. We took off half of our position yesterday at the close, so we have a 20% long position, and we're looking to either go flat or get long unless the market just keeps grinding lower. But that's a day-to-day thing. So other than that, hey, Merry Christmas, Happy Hanukkah to everyone, and enjoy your day.